Hello friends, welcome back to Letstute Accountancy. Today we are going to solve problem based on consignment. So let's get started. Mantu consigned goods of the value of 50,000 to Pandey. This was made by adding 25% on cost. So goods are consigned at invoice price. Mantu paid 2,500 for freight and 1,500 for insurance. During transit, 1/10 of the goods was totally destroyed by fire and a sum of 2,400 was realized by Mantu from the insurance company. So there is abnormal loss in transit. There was a loss by fire, so that is your abnormal loss. And against that loss, insurance company has paid a claim of 2,400. On arrival of the goods, Pandey paid 1,800 as carriage to godown. During the year, Pandey paid 3,600 for godown rent, 1,900 for selling expenses. 1/9 of the remaining goods was again destroyed by fire in godown and nothing was received from the insurance company. So now this is again there is a loss by fire in the godown of the consignee. Pandey is your consignee. Mantu was consigner. So in the godown of consignee there is a loss by fire. So this is your abnormal loss second time. And in that case you have not received anything from the insurance company. Pandey sold half of the original goods for 30,000 and charged a commission of 5% on sales. Pandey sent a bank draft to Mantu for the amount so far due from him. You are required to prepare following ledger accounts in the books of Mantu: consignment account, goods destroyed by fire account, that is your abnormal loss account, and personal account of Pandey, so that is your consignee account. So in this question we are just required to prepare 3 accounts in the books of consigner. So there are no accounts asked in the books of consignee. Now this is very basic simple type of question where goods are sent, but the variety over here is there are two times the abnormal loss is there. Once the goods were in transit, and second time when the goods were in the godown of the consignee. So we'll start with the solution. We will have to prepare 3 accounts, that is in the books of Mantu: consignment account, goods destroyed by fire account, and Pandey account. So first, Mantu consigned goods of the value 50,000 to Pandey. This was made by adding 25% on cost. So now this 50,000 already includes profit added on cost. So we'll pass the entry for this to goods sent on consignment account, and this value is 50,000. Now this includes 25% loading on cost. So we'll have to find loading on this. So we'll prepare a working note. So cost plus loading is your invoice price. Now they have said this was made by adding 25% on cost. So I can assume cost as 100 because on cost they are charging a profit, that is loading of 25%. So if cost is 100, loading would be 25, invoice price would be 125. Now this goods are consigned at 50,000, which already includes the loading because this was made by adding. So this already includes the loading amount. So this 50,000 is your invoice price. So if 50,000 is 125, then your loading is how much? So we'll just do the cross multiplication. 50,000 into 25 divided by 125. So that comes to 10,000. So that is your loading amount. So we'll pass the entry for this loading also by goods sent on consignment account in brackets loading. And I have prepared 2 working notes. One would be valuation of stock and for the abnormal loss or closing stock if any, and second is your loading. So I'll give the reference as working note 2, and that is 10,000. Now in previous solution or in previous sums, I had mentioned you that whenever there is a loading, you always find out loading per unit, because if there is any abnormal loss or you want to find out stock reserve on closing stock, so we multiply quantity with loading per unit to find out the correct loading amount on that respective items or abnormal loss or closing stock or anything. But in this case they have not mentioned quantity in this case. Okay, so now this is a variety over here where the quantities are not mentioned. If you see, you'll see some fractions: 1/10 of the goods, 1/9 of the remaining goods, half of the original goods. So in this question they have given everything in fractions, but they have not given you units. Okay, so we cannot find out loading per unit. So that's it. Then we'll go further. Mantu paid 2,500 for freight and 1,500 for insurance. So to cash bank account for freight 2,500, for insurance 1,500. Now during transit, 1/10 of the goods was totally destroyed by fire. So we'll have to find out the value of this goods lost by fire. So we'll prepare a working note, valuation of stock. Now we generally prepare 2 columns for quantity and rupees, but in this case quantity is not mentioned. Now there are 2 options. Either you do all the calculation in fractions, or you can assume some quantity for your calculation. So I will show you both. I'm writing an assumption assuming 100 units are sent on consignment. Now this is pure assumption. Okay, so you never mention units in your ledger accounts or in your journal entries, if any, because this are not your actual units. This I am assuming just for my calculation. So I'll prepare columns as for quantity and amount. Now first of all, goods sent on consignment. Now if we go with this quantity, this would be 100 units, and the goods are sent on consignment at 50,000. Though 50,000 is your invoice price, but goods are invoiced at invoice price. Goods are dispatched at invoice price. So you will record this at 50,000. Then you add consignors all expenses. So quantity would be dash. Consignors expenses is 2,500 plus 1,500. So that is 4,000. So now 100 units are worth of 54,000. When these goods were sold in transit, some goods were destroyed. So less. Now you can write as loss by fire, or in the working note you can write just abnormal loss. If I say abnormal loss 1, now since there are 2 times the abnormal loss were there, so just for our reference I am marking this as abnormal loss 1 and further abnormal loss 2. What they have specified? During transit, 1/10 of the goods was totally destroyed by fire. So that would be 1/10 of this quantity. So 1/10 of 100 would be 10. So amount would be how much? So that would be 5,400. So you deduct from here, this would be 90, and 54,000 minus 5,400, that comes to 48,600. So though we didn't knew the quantity, we just assume there are 100 units, and 1/10 of 100 units would be 10, and that comes to 90. So now 90 units are worth of 48,600. Now instead of this, we can directly go with the fractions without any assumptions also. So we can do, when the goods are sent on consignment, when we do in the fractions, the total is always 1. So I can say this is 1. For expenses it would be 0. So now this is 1. 1/10 of the goods are destroyed by fire. So this would be 1/10. 1 minus 1/10 would be 9/10. So if you see, this would be 1/10. So 54,000 into 1/10 would be 5,400. So that way also your answer will come, or you can go with the assumption of units. You can do any of this, okay? So we'll pass the entry for this abnormal loss, but we'll write the name of the account specified in the question, that is goods destroyed by fire account. So by goods destroyed by fire account. Just for our reference, I am marking this as 1. You need not mark this as 1 in your question, that is okay. 5,400. And second, if I go to goods destroyed account to consignment account, 5,400. Now again, since the goods were sent at invoice price, this 5,400 worth of abnormal loss would be also at invoice price plus proportionate expenses of those consignors expenses. So we will be required to find loading on this abnormal loss also. So we'll do the loading over here now. Since we have taken the assumption of 100 units, for our reference purpose we can say loading per unit will be equal to 10,000 divided by 100 units. So that comes to 100 per unit. So loading per unit would be 100. Now first, loading on abnormal loss 1, since there are 2 times abnormal loss. So that would be, you can do any of the method. So if we are going with the per unit, then per unit is 100 into quantity is 10 units, loss quantity is 10 units, so that will come to 1,000. Or you can do is, this is 1/10, abnormal loss is 1/10, so that would be 1/10 of your total loading also. So total loading is 10,000. 10,000 into 110, that will also come to 1,000. So you can either do by this, assuming units and then doing all the calculation with units, or you can do with the fractions also. So we'll pass the entry for this loading to goods destroyed by fire account. In the same account, we'll reverse the loading to find out the net cost of goods lost. In brackets loading, working note 2, here I can say working note 1, and that comes to 1,000. Second effect goes to goods destroyed account by consignment account, loading 1,000. Next, a sum of 2,400 was realized by Mantu from the insurance company. So this is your insurance claim realized. So we are receiving the money, so our entry would be cash bank account debit to abnormal loss account, because by that claim amount your loss decreases. Now if you see over here, we had thought that the loss by fire is 5,400, but then we realized that 5,400 includes the invoice price, and goods were sent at invoice price, though that is why this was valued at invoice price, but actually it should be valued at cost. So 5,400 minus 1,000. So now 4,400 is the cost of goods which is lost by fire, and out of that we have received the insurance claim. So our entry would be cash bank account debit to goods destroyed. By that claim amount your goods destroyed loss reduces. So we credit that account by cash bank account for claim, that is 2,400. So now we can say 5,400 minus 1,000, that is 4,400 was the net cost of goods lost by fire, minus 2,400. So 4,400 minus 2,400 is 2,000 is your actual loss suffered due to this transit loss. Okay, so this is done. Now for all this transaction, if we prepare the books of consignee, there would be no effect in the books of consignee, because the ownership of the goods sent, consignor's expenses is all done by the Mantu consignor. So consignee will not pass any entry. But in this question we are not preparing any books of consignee, so we need not worry about that. On arrival of the goods, Pandey paid 1,800 as carriage to godown. During the year, Pandey paid 3,600 for godown rent and 1,900 for selling expenses. So these all are consignee's expenses. Entry, consignment account debit to consignee, so to Pandey account. Carriage to godown is 1,800. Godown rent is 3,600 and 1,900 is for selling expenses. Second effect goes to Pandey account credit by consignment account expenses. We'll write total over here. So 1,800 plus 3,600 plus 1,900. So that comes to 7,300. So next, 1/9 of the remaining goods was again destroyed by fire in the godown and nothing was received from the insurance company. So again there is the abnormal loss by fire in godown. So this abnormal loss was in transit. Now we are having abnormal loss in godown. But before that, when the goods are reaching to the godown, consignee has incurred this carriage expenses for the goods to be transferred to godown. And godown rent and selling expense are not your non-recurring expenses, but we will have to add this carriage, that is your non-recurring expenses. So after this we will add consignees non-recurring expenses till the goods reaches to the godown. In expenses there is no quantity and your amount would be only 1,800. Only carriage amount, that is 48,600 plus 1,800. So that comes to 50,400. So now we can say as 90 units on our assumption basis are worth of 50,400, or we can say 9/10 of the quantity is worth of 50,400. And now again there is the abnormal loss, so less abnormal loss 2, and this abnormal loss is in godown. Now they have specified 1/9 of the remaining goods was again destroyed by fire in the godown. So of the remaining goods 1/9, so that is 1/9 of not 100 of the remaining, that is out of 100 10 units are already destroyed in transit. So consignee has received 90 units, and out of this 90 units 1/9 of the goods is again destroyed. So 90 divided by 9, that is 10 units again. So this would be for 10 units the cost would be how much? So 10 into 50,400 divided by 90, so that comes to 5,600, and this is 1/9 of the remaining. So now when we do 1/9 of the remaining, that is 9 by 10, that is remaining, into 1/9. Is this correct? 9/10 is the remaining into 1/9, that is 1/9 of the remaining. So if we multiply this, this would be 1 by 10. So your fraction would be 1 by 10. So your remaining would be 9 by 10 minus 1 by 10 is 8 by 10, or in quantity it is 80 units, and this is 50,400 minus 5,600, that comes to 44,800. So you guys, you understood this calculation. So first the goods were sent by consignor. For sending those goods, consignor has incurred some expenses. In transit there was some loss that we deducted. Then consignee receives the goods. Consignee incurred non-recurring expense to reach to the godown, or to make the goods reach to the godown. So that is the consignee's non-recurring expenses. And then again there is a loss by fire in the godown, that is 1/9 of the remaining, and that we get 8/10 of the goods in fraction, or 80 units. You can do in either of that, okay? And that cost 44,800. So now passing the entry for this, again by goods destroyed by fire account, that will go to same account because both is destroyed by fire. Or you can mark this as 2. It is okay if you don't write 1 and 2, because this is just for your reference as for working note 1, and this now comes for 5,600. Second effect of this goes to goods destroyed account. To consignment account 5,600. And again, since the calculation all started with the invoice price of the goods sent, this is also containing invoice price plus proportionate expenses incurred by consignor and consignee. So 5,600 also contains loading element. We'll have to reverse that loading, so that would be reversed on the debit side. First of all, we'll find out the calculation. Loading on abnormal loss 2, that would be, again going with the units, there were 10 units, and if we go with the per unit loading, that was 100, so this comes to 1,000, or you can say as 1/9 of the remaining goods was destroyed. So out of the total loading of 10,000, 1,000 loading is already reversed for the first abnormal loss in transit. So remaining loading is 9,000. So 9,000 into 1 by 9, that will also come to 1,000. So guys, understood this? So don't take 1,000 into 1 by 10. Sorry, 10,000 into 1 by 10, because it is 1/9 of the remaining. So loading would be also 1/9 of the remaining loading. So out of this 10,000, 1,000 is already reversed for abnormal loss. So remaining is 9,000, 9,000 into 1/9. Or you can do assuming some units, find loading per unit and find out the loading on the respective item while multiplying quantity into loading per unit. Okay, we'll give effect for this 2 on the debit side. 2 goods destroyed by fire account, loading, working note 2, and that is same 1000. Second effect, goods destroyed account, by consignment account, loading 1000. So till now all the abnormal losses recorded. Next, now in this case nothing was received from the insurance company, so we are not receiving any insurance claim, so no entry for the claim amount. We will close this account at the end, so don't go in the hurry to close this account, close at the end. Pandey sold half of the original goods for 30,000. So this is your sales entry. Entry would be, yes, consignee to consignment account. So now you know the entries very well. By Pandey account, sales 30,000, and it would be debited to Pandey account, to consignment account, sales 30,000. Next, and charge a commission of 5% on sales. So that is our expense. Consignment account debit to Pandey account. Commission is charged as 5% on sales. So that is 30,000 into 5%, 1,500. Second effect goes to Pandey account credit by consignment account, commission 1,500. Next, Pandey sent a bank draft to Mantu for the amount so far due from him. So whatever would be the final balance in Pandey account will be settled through a bank draft, and you are required to prepare this 3 accounts. So we are done with the question, but what is our final check? To check always for the closing stock. So now if we check for the closing stock, we have done the calculation till goods sent, add consignor's all expenses less abnormal loss 1, add consignee's non-recurring expenses, again there was abnormal loss. Now is there any normal loss in the question? No. So this I can say is value of good quality stock, and this we compare with the closing stock. Now they had specified that Pandey sold half of the original goods. Guys, do read the question very carefully. First time when there was a transit, there was 1/10 of the goods was destroyed. So 1/10 of the total goods was destroyed. Then they said 1/9 of the remaining goods. So that 1/9 of the remaining word is important over here. So whatever is the remaining goods, of that 1/9 goods was destroyed by fire again. And sales is not half of the remaining goods. Sales is half of the original goods. So whatever is your original goods, out of that half of the goods are sold. So if we go with the quantity, this would be half of 80 or 100. Yes, half of 100, because half of the original goods is sold. So your closing stock would be, we are left with 80 units minus half of the original goods are sold, that is 50 units are sold. 100 minus 100 into half, that is 50. So that comes to 30 units for closing stock. So what would be the value of closing stock? So if you find out 44,800 into 30 divided by 80, so that comes to 16,800. Or you can do this by fractions also. We were left with 8/10 of the goods minus what they have told you, half of the original goods is sold. Now total would be always 1. So half of 1 would be half. So 8/10 minus half is sold. So just solving this, you will get 3/10, 8/10, and taking this multiply with 5 and 5. So this would be 8 minus 5 divided by 10. So that comes to 3/10. So now also you can say 44,800 is 8 by 10, then 3 by 10 is how much? So if you cross multiply that also, you will get same 16,800. So that comes with your closing stock. Again, goods were sent at invoice price. So this abnormal loss of amounts or closing stock amount is also at invoice price. Again, need to find out the loading on the same. So working note 3 or working note 2, in that we are doing this third, loading on closing stock, going with the units. So then there are 30 units and per unit loading is 100, that will come to 3000. Or your total loading is 10,000. 10,000 into fraction is how much? 10,000 into 3/10 of the goods are still remaining as closing stock. So that will also come to 3000. Okay, so this is your loading. So now if you see, we have done through units also. If we take the units assumption, then over here we have taken units also. If you don't want to go with the units, then fraction is also simple. Just do with the fractions. Over here I'll just put a bracket, abnormal loss, and this is your final closing stock. So out of the total stock, 3/10 of the goods are remaining. So out of the total loading, 3/10 of the loading would be on closing stock. Passing the entry for this. For closing stock, entry would be stock on consignment to consignment account. So buy stock on consignment account, working note 1, that comes to 16,800, and loading on the same we transfer to stock reserve account. That is your loading, and this loading is 3000 on the closing stock. So we have passed all the entry. Now before closing, we'll just go through once that we have taken all the things. So goods are sent, consignor's expenses are considered, then the goods were lost in transit. When the goods are sent, loading is reversed. When the goods was destroyed by fire, again loading is reversed. Then the consignee receives the goods and spent expenses on that. Again there is the loss by fire, on that loading is reversed. Then consignee makes the sales. On sales we have given the commission. Then closing stock, finally closing stock valuation and loading is reversed. So we have done with the almost basic all the transaction of the consignment. So we'll start totaling of this. Check whether your debit side is more or credit. So I'm starting to add the credit side. 10,000 plus 5,400 plus 5,600 plus 30 plus 16,800. So that comes to 67,800 minus 50,000 minus 2,500 minus 1,500 minus 1,000 minus 1,800 minus 3,600 1,900 minus 1,000 minus 1,500 and minus 3,000. So that comes to 0. So in this case there is no profit loss, and total of both the sides comes to 67,800. So that is your total. So there is no profit loss on the consignment. Next, goods destroyed by fire account, 5,400 plus 5,600. So that comes to 11,000. Minus 1,000 minus 2,400 minus 1,000. So that comes to 6,600. This is your net loss transferred to P&L account. Okay, if you just want to cross check, we can say first time the goods lost by fire was 5,400, out of which 1,000 was loading. So 4,400, and out of which 2,400 was received as insurance claim. So this comes to 2,000, 4,400 minus 2,400. So loss for the first time was 2,000 plus second time 5,600 was your loss, but out of which 1,000 was loading. So your net loss was 4,600. So plus 4,600, that comes to 6,600, or else this is just a balancing figure. And lastly, closing the Pandey account, 30,000, 30,000 minus 7,300 minus 1,500. So that comes to 21,200, and they had specified in the question that Pandey sent a bank draft to Mantu for the amount so far due from him. So from Pandey, due amount is 21,200. So for 21,200, we are receiving bank draft from Pandey. So we are done with our question. So guys, in this question, the important parts were this abnormal loss account, because there were 2 times abnormal loss that we have not done in the previous question. In the previous sums, we had abnormal loss for once, but in this question there are abnormal loss twice. On that we have reversed the loading. There was closing stock valuation. On that, loading is reversed as stock reserve account. Again, over here we can give the reference working note 2. Then for the quantity, now this was quite important for the quantity, because sometimes people get confused that there are only fraction, there are no quantity. If you see fraction, it was very simple. So actually you need not require this assumption or anything, so you can go with the fraction also. But if somewhere you get confused that how to calculate fraction, if you get confused for the add, less or something, you can just assume the quantity, write the assumption compulsorily. So assume the quantity, do the calculation with that units, and then do the calculation for the loading. But do remember, do not specify this quantity over here. You can specify fractions, but you don't specify quantity over here, because this quantity are based on our assumption. That is not your actual solution. Okay, so that is our assumption. So don't specify over here. You can just specify in your working notes. So that's it for today. I hope you understood this question. If you have any query related to it, do post in the comment section given below. Stay tuned with us for more such problem solving sessions with us. Thank you.